Everybody, happy Wednesday. This is the morning show, Stock Market TV. Spencer, Steve, JC, Alfonso. Everyone's got functioning cameras, microphones, computers. We're all good. I was just looking at my charts, and all of a sudden things started going haywire. And I'm like, what's going on? Oh, right. It's 8:30. We got CPI. So that number just out. Looks like a good number coming in below expectations. So lower inflation means Fed. Oh, speaking of Fed, we have a Fed meeting today. So it's CPI in the morning, Fed in the afternoon. What are they going to say? Do we care? We'll talk about it. That's what we'll talk about today. We got a lot of other things on our radar. We got to talk about Apple. Obviously, that was the story of the day yesterday. I got a few of the stocks on my watch list. Jason Leavitt is today's guest. He'll be on at 9. We'll have Mornings with Mary at 9:30. That's the drill. Smash the like. Let's go.
Hey, gentlemen.
Hey.
Hey, now. Oh, here we go.
What's the occasion?
I just figured I'd dress up for you guys a little bit. You know, no big deal.
Don't get all dressed up for us now. You look like you're ready to go to a country club.
No, that's tonight, unfortunately. I gotta go. I'm going to the city, doing city things today. You know, maybe a little sushi, maybe hang out with Pearl Dog a little bit. No big deal.
City boy doing city stuff. All right. Enjoy. Where are you going to go for sushi?
I don't know. I don't need to like dox myself like before I show up. Like I don't need like paparazzi like showing up taking pictures of me and Perlman. Like I don't need that in my life.
This is so unlike you to say that. Usually you'll be like, I'll be at Blue Ribbon at noon sitting at the bar.
Listen, Blue Ribbon in a worst case scenario. You know, that's my plan B. No big deal.
That to me means you just haven't decided yet. All right. No doubt.
Depends what time I get there. You know what I'm saying? I'm going to be down in the village. So that's cool. I don't got to go to stupid Midtown like all these other assholes are always inviting me to Midtown. If you're inviting me to the city, don't invite me to Midtown. Jeez Louise. Downtown like a normal person. Who wants to be in Midtown? With your fucking sweater vests and your bums and your interns with like high heels, like on your first day with the blisters in the back. I know what Midtown is like. I don't need to be there.
It is intern season, JC.
It is hardcore intern season. You got girls walking around barefoot like after the first day because they never wore their shoes. Like, you know, then you got like the dudes in like, you know, in like the new suits and like the watch and the shoes. Like, bro, you're the intern wearing better shoes than me. You know, that's no good. It's not a good look.
So as much as I would love to talk about your city adventures all morning, we had a CPI. We had a CPI 5 minutes ago. We have a Fed.
Is that anything like an RBI? Is that
close?
Spencer.
It's almost. All right, let's talk about it. Let's do it.
Give it to me, Spencer.
Let's go.
Wait, is this a state of the markets thing? Sure, probably it is. Let's go. Okay.
I'm wearing it.
Yeah.
I got a tie on.
Is this what they call
It's the first time ever on the show that anyone wears a tie?
I mean, I think this is a first. You just broke the record.
New record, no big deal. That's what I do. Break records.
Fanciest man.
All right, so big day after the RBI. Dow futures up 0.2% here. 270 points up this morning for the world's most important stock market index. Here you're looking at S&P futures up 80 basis points, 42 points to the upside, 5,400 for your S&P 500. How you doing? NASDAQ 100 up a stick this morning, a full percent, up 190 points for the NASDAQ 100 futures. Holy cow. 30-year bond futures up over 1% as interest rates are getting slammed. 10-year futures up as well. Crude oil up 1.3%, back at 79. How you doing? Copper futures up 1.4%, pushing 460 on the copper. Gold up a stick today, 23.50 for gold futures. Silver up 2.5%, back at 30. Volatility absolutely collapsing. The funny money going wild. Bitcoin up 2,000 points, back above 69,000. Ethereum up 175 points. That's 5% this morning. Solana back towards 160, up 10 points. That's 6.5% for Solana. Binance, another 4% to the upside, 630. Total crypto market cap, Spencer Israel, $2.46 trillion. What stands out this morning from the futures? Where do we even start? Where do we start?
Well, we should mention the CPI, just for real.
I woke up this morning and I was listening to them talk about the CPI on the news, and I was thinking to myself, ice cold CPI, red hot cryptos, right? Isn't that how this works? They're going to trade like all these speculative tech stocks. Like look at everything that's catching a bid. Look at ARK right now, up, I don't know, 3% in the pre-market. IPO index ripping, right? It's all your speculative stuff, and that includes Bitcoin.
So all the stuff that peaked early 21 is what you're saying.
Yeah.
So biotech and biotech should be doing well. Chinese internet should be doing well. Do I have that right?
Yep. Financials. Bio's up nice.
Speculative tech. I'm into it. Why don't we go to slide 4 here? Let's just remind everyone where we're at. We have a celebration on Sunday. I don't know, how are you guys celebrating the 2-year anniversary of this bull market?
Probably
Strazza's going to play golf. Spencer's going to go to the diner. JC's going to take care of his kids. Right?
Are we not going to read the CPI headline? I'm sorry.
Sorry. Yeah, CPI. Estimate for CPI was 0.1%. Actual month over month 0.0. I'm not going to do the sound effect. Got more things to read. So the month over month number came in below estimates and below last month's reading. Core CPI month over month up 0.2% versus a 0.3% estimate. So again, below estimates on the overall CPI, below estimates on the core CPI. Inflation falling month over month and year over year. And as Strazza said, risk assets catching a bid. And this sort of is a nice little, I think, a nice little checkbox for the Fed.
Ice cold, baby. They like it ice cold. What do you think, JC? You like it ice cold? They're loving it ice cold this morning.
It depends what I'm drinking, if I'm drinking a white wine, you don't want it too cold, right? Because it kind of hides those flavor profiles, and the aroma as well. So you don't want it too cold. The 10-minute rule is how I look at it, hot and cold. You ready? 10-minute rule. You take the white wine out of the fridge 10 minutes before you drink it. You put the red wine in the fridge 10 minutes before you drink it. That's how I like to think about it.
Yeah. Yep.
Just like, wait, what?
I've never heard of putting red wine in the fridge, but all right.
That is an old.
Yeah, because you're drinking fucking Manischewitz or whatever the hell you guys are drinking over there. Like, we drink real wine, the Italians, the Spanish, the French,
Real wine.
Not this shit.
I keep my red wine with sugar. What can I say?
Oh, no, let me tell you something. Some of the kosher wine that I've had over the years is actually delicious. I'm just breaking balls, but that Manischewitz stuff, ixnay.
All right. A lot of things. I mean, I'm looking at the report a little bit in detail. I mean, some things went up, some things went down. Obviously, there's always that dichotomy there. Things that jump out to me: transportation up 10.5% year over year. I'm talking not month over month. Obviously, that would be insane. 10% year over year. Used cars down 9% year over year. What jumps out to me? I don't know.
Shelter's the big one. I thought Shelter was supposed to be going down. Why is it up 5.4%?
Yep. Shelter up 5.4%. Computer software and accessories down 4%, 3.9%.
All right.
So yeah, a lot to digest here.
Shelter's supposed to be going down.
Yeah, go ahead.
Shelter's supposed to be going down. I don't know why it's up 5.4%.
I don't know.
Hmm.
I don't know.
Okay, great. That's enough. That's enough on the inflation for me. You guys good with the inflation?
I was good, but I didn't even know it was happening today.
Somebody in the chat said JC's getting dressed up for the Powell speech. I love that.
Are they doing that? Why is there so much shit today?
It's
Can
nice.
you just shut up with the CPI,
It's Wednesday,
and the
man.
10 minutes, and the Powell.
Yeah, it's a big
Do
deal.
you understand we have sushi to eat?
Can
we get into something important that actually matters instead of this bullshit about your economy? Nobody cares about your economy.
Slide 2.
Also, not to mention,
2.
this data is obsolete and currently incorrect. So we know that. So why are they making such a big deal about it? Who gives a damn?
It's not incorrect.
Yes, it is. It's outdated, and we know it's incorrect, and we know it's going to get adjusted in the future. So who cares?
Wait, I meant slide 3. Sorry, Fonz. Well, anyway,
Can we talk about the 2-year anniversary of the bull market, please?
Yeah. How are you going to celebrate? How are you going to celebrate?
I'm going to take care of my kids. You're going to play golf, and Spencer's going to a diner.
Okay. All right, fine.
That's how we roll around here, you know? Spencer, can you throw up this goddamn chart, please?
No champagne.
Well, I think we're up to 4 now, Fonz. There we go.
All right. This is the 2-year anniversary of the bull market on Sunday. God, I wish there was a football game or 10, right? Wouldn't it be nice if it was football season? We call that fall. So here's something that I want to point out. So this goes back to when the new 52-week lows list peaked on June the 16th of 2022. That was when the prior bear market that began in 21 finally came to an end. Things got progressively better from there. When you go back and you study every bull market in history, one thing you'll notice is that technology is a leader and an outperformer in almost every single one. So the fact that technology is a leader and an outperformer in this bull market is perfectly consistent with pretty much every bull market in history. So people are like, oh, and we'll get into Apple and NVIDIA and the 3 trillion club now in a minute because I thought it was a pretty sweet chart. Actually, why don't you go to it and then we'll come back to this. Go hit it, Spencer. Give the people what they want. Give it to them. Oh, yeah. Give it to them. So is NVIDIA officially over 3 trillion here in the pre-market? So we can officially say there are 3, NVIDIA up 2%. So we could say yes, officially. There are 3 companies that are worth $3 trillion. 3 companies. Suck it, China. You see that? Take that. 3. How do you like that, commies?
This is the big 3. And man, Microsoft looks so good.
This is like Dwayne Wade, LeBron, and Bosch back in the day, right? This is your big 3 there, Spencer?
Who's LeBron?
Stop it.
No, I'm saying on this chart. Who's LeBron?
That's what Danny Hurley just said.
Apple. No. I wasn't being smart. I'm asking a serious question.
Danny Hurley said LeBron who?
Is Apple's LeBron, right? Yeah, Apple must be LeBron.
Hold on. So how do we feel about this? We have 3 companies that are worth $3 trillion. You guys don't think that's cool? I think that's pretty cool.
That is neat. Which one? If you could buy one right now, which one are you buying?
Well, I own all 3.
For the rest of the year. You buy one now today, rest of the year. I don't care what you own. Which one do you buy today?
It's a good question. Probably Apple. Gun to my head, like if this was actually like a competition, who do I think wins from now to the end of the year? Probably Apple.
I don't think I have the God damn it, I wish I owned more feeling with any stock more than Apple over the years. Like every time this stock does this, I'm like, why don't I just own more of Apple?
Could be Microsoft too. The chat's chiming in on Microsoft. I was thinking Microsoft or Apple because of the bases that they're coming out of.
Yeah,
NVIDIA is like, NVIDIA's made quite the move, so it's more like the relative strength's been in NVIDIA. So,
I would want to own Microsoft and Apple from right here through the rest of the year. I think both of those will be great trades.
Okay, go back to the performance chart. So all 3 of these are in the technology sector, and just to give some folks some perspective. So technology, obviously the leader, this bull market. Microsoft represents 22.5% of the technology index. Apple represents 21.5%. NVIDIA is only 5%. So NVIDIA represents a much, much, much smaller portion of the technology index. It's a quarter, less than a quarter of the weighting of the other ones. So just to give some people some perspective, NVIDIA doesn't move the needle on the XLK. This is a whole bunch of Apple and Microsoft. Just for the record. Also, Broadcom's weighting is just behind NVIDIA.
New all-time highs. Every one of these things is at new all-time highs, by the way.
You'd think like, NVIDIA would be a larger component of the XLK, wouldn't you?
You want to play a game right now? Let's
Sure.
just go right down the list of XLK components. Let's just count it out. This is just based on size, not weight.
Microsoft, Apple,
all-time high.
NVIDIA,
whatever.
Broadcom,
Apple, all-time high.
AMD,
all-time high. Oracle, all-time high. Happened this morning while you were sleeping. Salesforce, not an all-time high, but you get the point. Qualcomm, all-time high. Like you just go right on down the list, and there's more and more of them. Applied Materials, all-time high. Anything that's a semiconductor, all-time high. Lam Research. This group is so good. The way I learned it was don't bet against big tech, right?
Well, it depends on the environment. We've made a lot of money betting against big tech in the past.
Not really.
What are you talking about?
Like shorting Apple?
Oh, this year. Yeah, no, I guess over the years, we haven't made much money. We haven't really even in bear markets, I don't really recall getting very aggressively short some of these mega tech stocks.
Because
one of the best trades in 2018 was the puts that we had in the XLK. That worked out well. So technically that was short big tech.
Index.
Anyway, it's not the point. Strazza's right.
We're not out here trying to short the best stocks, even in bear markets.
Yeah, no, that's right.
Wait, real fast.
Can you throw up the chart again?
Wait, yeah. What's the difference between the size of those companies and the weighting in the ETF? Shouldn't they be pretty similar?
Very different.
Oh, because they fluctuate and then they have to reweight.
NVIDIA is only 5% of the XLK, and it's as big as the other two.
Yeah, it's trash. That'll change.
That'll probably change. Yeah.
How often do they do that?
Probably
not often enough.
All right.
Well, it changes every day, but they have to make a valid effort to actively manage that.
Yeah.
So contrary to popular belief, passive investing doesn't actually exist. It's like this fugazi thing that people think about. There's no such thing as passive investing. You are either actively managing your own account or you're having the folks over at Standard & Poor's manage it for you, right? But there is nothing passive about it, as you can see here, right? Exhibit A. Okay. Technology, leader this bull market. Number 2, communications, which one can argue is essentially technology, as the heavy weightings are Meta and Google, right? And very obnoxiously skewed once again in favor of those big two. You've got 21.5% Meta, and you've got 26% almost Google. And then after that, it's a big drop off. T-Mobile's next at 4%, and Netflix 4%. AT&T 4%, EA 4%, Verizon 4%, Comcast 4%, Charter 4%. So the big two, once again, major representation of the XLC, which we have and we continue to argue is an extension of technology. And then you've got industrials, which again, industrials should do very well and outperform in a bull market. That's what's happening. Financials and consumer discretionary rounding out the top 5. And then when you look at the most defensive areas, they're down at the bottom. Real estate, utes, staples, they're the worst performing sectors. Again, all of this perfectly consistent with bull markets. How do you feel? Any thoughts on this, or just another bull market standard shit?
You know how I feel about tech stocks. I love them. It's good stuff.
Do you know that technology is not the leader this year? Did you know that?
It would be communications.
That's right.
Yeah.
What is the worst sector this year?
It would be. Is it real estate again?
It is. It's real estate by a long shot. Consumer discretionary. Consumer discretionary also negative year to date.
Yep. Yeah. Well,
NASDAQ 100 year to date up 13%. S&P up 12.5%.
So to me,
not to overthink those year to date numbers. I don't really care that. I care more about the performance from those lows. Yeah.
Wait, can you actually put it back up for a second? Because I actually care a little bit less about the fact that financials have outperformed discretionary by 3 percentage points over the course of 2 years, right? It's more about the 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 absolute move, right? So the fact that technology has outperformed so dramatically at the very top, and then at the very bottom, right, has outperformed have underperformed so dramatically. That's what's it's to me, it's the magnitude, not the ranking, right? So XLK huge winner, real estate and utilities huge losers. Everything else sort of
Well, yeah.
jumbled mess.
Yeah. The bigger takeaway for me here is that, we talk about all the time how trends persist. Well, relative trends persist. JC has zoomed all the way back out to the bear market lows, and you see stuff at the top of the list like technology, communications, right? And then you just ask the question, what's leading this year? It's the same stuff. Technology, communications. What's lagging? The same stuff that was lagging, when you zoom all the way back out to the bear market lows, right? So the relative trends persist as well. The leaders keep leading, laggards oftentimes keep lagging, like you see with real estate, utilities, staples.
Of course, we know that in this 2-year period, there were several periods of time, weeks or months, where it looked nothing like this. This ranking was totally out of whack, right? For a given period, right? You had energy, right? You had almost all of those sectors, maybe not all of them, I don't know, but almost all of them led at certain points.
Yeah, when you go back to the beginning and you look at the first 6 months of this bull market, which was the back half of 2022, everything was working except for technology. Everything. Industrials, consumer discretionaries, financials, everything was working out great except for technology. And then coming into 2023, they stepped in, and boy, did they play catch up. It was actually the best first 6 months for the NASDAQ ever. So this was the first half of last year, 2023. So they
my
caught up
question
very
to
quickly.
my question to you, would it be a useful exercise to take these last 2 years and look at every rolling, I don't know, 4-week period and see who the leader was over that period to just get a sense for the rotation? Or not really?
No, not really.
No?
Because the rotation didn't happen every 4 weeks. The rotation happened coming into the year in 23, where technology and these mega cap tech stocks were not working. So you needed to see rotation into those areas, and then you saw it. And then they were absolutely blowing it up to the point where all these idiots were telling you there was only 7 stocks. Remember those fools? So then you needed to see rotation back into the industrials and financials and some of the areas that led off the lows in the summer of 22. And then you got it, right? And then coming into the fourth quarter, it's like, well, all these things are working great, but what about small caps? What about regional banks? What about biotech? And then what happened? You got the ripper in the fourth quarter into all those areas. So like we've seen that rotation. It's just not as simple as every 4 weeks. It comes every
I know. You got to draw a line somewhere.
4 to 6
okay,
months,
fine.
really.
Fine. All right, I got something
I like
really.
where your head's at, though, Spencer. I like where your head's
Moving on.
Hold on. If we gave out awards on this show, this is important. Everybody listen. Yesterday, we talked about Apple. What we didn't talk about was the candlestick in Apple. This is what you call the perfect candle. It's the best candle.
Perfect candle. Wow.
It's the perfect candle. So this is the best daily candlestick in the history of the stock market.
Wow.
Okay, I'm going to tell you why. This is it. It's not a bullish engulfing. It didn't even engulf the prior day's range because it just took off from the lows. When you have a bar that big or a body, candlestick body that big, what it tells you is that the stock rallied all day long. It opened at the bottom of its range for the day and it closed way at the top. They call it a Maribozu. Maribozu.
Yeah, but the Maribozu is just a massive stick. This is more of like the fuck you candlestick. Like this is like a big middle finger. Like it even stands out. It even looks like a middle finger.
You could call this anything you want. It's the perfect candle. Also, notice how it happened at this just clear resistance zone, right? So polarity is real. The bulls saw this. They piled in. Momentum just kept coming into the name all day. That was some killer price action.
Yeah, Maribozu doesn't do it justice.
It's a god candle.
No, it's a great candle. It's a great candle. I would argue the greatest candle in the history of the stock market is the Russell 2000 futures in the first week of November of 2016.
I know that's your favorite.
That was such a great candle.
This one's perfect.
It's such a great candle.
So shout out Apple.
Yeah, shout out Apple. Shout out Apple. It's a hell of a candle. Maribozu doesn't do it justice. It's better than a Maribozu.
Yeah, we need a better name.
Yeah, I gave you the name.
Names. We have some names internally that I can't say on air, but it's a good candle. That's what counts. It's a good candle.
God candle. Yeah.
What about so I got something here. Throw up 5. Sorry to be such a Debbie Downer. Throw up 5 and 6 here. Wah, wah, wah. So emerging market currencies, I know how much you guys love talking about that, have gotten the shit kicked out of them. Brazilian real making new 52-week lows. Mexican peso next, hitting new 52-week lows. Korean won. I mean, you could go on and on. Spencer, that's your cue to throw up the Mexican peso. Just getting absolutely slaughtered here.
I got a chart too.
Do we need to see some rotation back into these EM currencies, or who gives a shit?
Like I don't know. I'm just
no, serious question. Who gives a shit?
Listen, it gives you good evidence on what the dollar is gonna do, and that's important. These EMs, we know that. That's why we follow them. So I hear you. Do you want to give them too much weight though? Why can't I get in trading?
This is the dollar. It's an extension of the U.S. dollar, right? And then people are like, well, it's because of the flood in Brazil, JC. And then, the election, JC. It's like, well, how come the Korean won looks like shit? Do they got floods and elections over there too? And then, right? You know what I mean?
Maybe. I don't know.
Definitely not. The Zloty's getting killed too.
Steve,
I appreciate that stock market, Mike. Zloty getting killed. Zloty.
Wait, what does Steve got? And then I want to bring on our guest after this. So, Steve, what do you
up
got?
over 1% on the day.
You're gonna have to wait, Spencer. These a lot of election season charts lately, right? Things just getting blasted, and then I'm like, what's going on? And I hit the Google, and there's an election somewhere. A lot of that going on lately. No?
Yeah.
All right. And then I heard too, we talked about on Spaces yesterday, we're having sympathy price action from elections. Have you heard of this? So in the European Union, these countries are similar in a lot of ways, and they read through other elections. So like if a lot of crazy right-wing party gets elected in Greece or somewhere, then like the UK stock market's selling off because they're pricing in maybe similar election action there.
That makes total sense.
Yeah. So very interesting. Election year stuff. Very interesting. Throw up the
They're
Bitcoin.
just kicking out all the communists. Is what it seems like.
Is that what's going on? I have no idea like who they're even electing.
Yeah, that's what I heard.
No.
They're kicking out the communists.
Who cares?
Bullish
That's
that.
the chart thing.
JC, scale of 1 to 10. How cute? How cute? How cute am I? Too cute?
Obnoxiously cute. There's so many lines and colors and
okay. All right.
The 4-hour chart, I don't mind. I don't mind that. I get down with that. But it's too cute. It's too cute. Take all that crap off, put a smiley face and some resistance up top, and you're good to go.
How did I know you wouldn't like it? Can I tell you what I did here?
I know what you did. You did way too much.
I'm VWAPing it right.
Unnecessary.
Okay. You got a very tactical top here, multi-week top, a quick shake. Good things start with a shake for Bitcoin. Good things start with a shake. Is that enough? Is that enough of a shake?
Too cute. Draw a smiley face and some resistance up top. You're better off that way. Trust me. Life is easier that way. The 4-hour chart, it's a little aggressive, but I can accept that. I'm good with that. It's the other stuff. It's all the colors and stuff. All right, guys, listen, I got to go. I appreciate the time. I'm going in the city, suckers. So adios.
Yeah, you're the worst. All right. Goodbye.
But can he do that?
That's funny.
All right. Well, I'm bringing on our guest. We got Jason Leavitt in the house. Founder, head of research, LeavittBrothers. He got some charts for us. So let's talk about it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jason.
Good morning.
How we doing?
Very good. How are you guys doing?
Doing all right. Yeah, this gets to be a little bit of a drowsy conversation. JC's not here to hog all the questions, which I know Steve, you always appreciate. So I know you sent over a few charts, Steve. They're in the deck. They're Fonz, just bring them to the top or something, so we have them handy. But let's just start off broad here. What are you thinking in light of? I don't know if you got a chance to look at the CPI today. In light of that, we have a Fed, of course, but what are your thoughts just heading into today?
All right, so heading into today, I mean, overall bullish. I don't know how you can not be bullish. The market's doing well. It's near its highs. NASDAQ, S&P. There are warnings, as there are always warnings, but the market is strong. It's healthy. It's trending up. A lot of quant studies point towards higher prices 6 months, 9 months, 12 months into the future. That keeps getting pushed out. At the beginning of the year, we had studies that said, hey, we're going to have a good year. And then a month or two later, we had more studies that say we're going to have another 12 good months. And here we are in the middle of the year, and we're still getting a steady flow of studies that say we're going to actually be strong well into 2025. So overall, market looks great. There are warnings. There are warnings in the near term, which we'll go through in a second. But overall, I don't know how you can be anything but at least moderately optimistic about the rest of the year and into 2025.
And is that just based on price action and trend? Or, I mean, what do you think of breadth right now? I know a lot of people who are concerned or becoming more cautious are citing breadth as the reason.
I too am a little bit worried about breadth, but to me, that's a shorter term thing. So overall, when I'm looking out to 2025, I'm saying the market's going to do well. If you're an investor, like my wife will come to me and say like, hey, what should I do with my 401k? And I'll just tell her, max it out and just stay long. There's no reason to do anything. If you're a trader, obviously, like, when you're looking out a week, 2 weeks, a month, then you got to pay attention to breadth. But if you're looking out next year and you're just a buy and hold, and as JC said, there's no such thing as like passive investing, because even the indexes are actively managed. If you're looking out to next year, there's no reason to be anything other than just in the market and just holding on.
I think that's a great point. I want to go to two of these breadth charts. I mean, the way we try to do it internally, because sometimes we got just too much data sloshing around the analyst team. Once you get the breadth thrust, the initial breadth thrust, we just really try not to overthink breadth until we get like a big warning sign, and then we'll just monitor the trend kind of for a rollover or top. But the whole period in between, all the middle innings, breadth can confuse you if you have a longer term time frame, right? Like dips probably want to be bought and stuff like that, and breadth can kind of give you maybe false warning signals at times.
It's true. It's like, Peter Lynch said something about, more money is lost anticipating a correction or anticipating a recession than in the actual correction itself. It's the same thing. Like, we could be 10% higher between now and, like, say early 2025. We could be 10% higher. We don't know what the path is going to be. Every time the market goes down, people are going to panic. They're going to say like, oh, this warning, this other warning. And then, for the people who just kind of bought and held, they're up another 10%. So it's true. Once you get rolling, the path of least resistance is to keep going. And those breadth readings are warnings in the short term, and they do often lead to pauses that last a couple of weeks, but the overall trend does stay in place.
Yeah. I mean, it could be a couple months, last summer to fall. Terrible, right? And then the market just rebound right from there, and it's go time again.
Exactly.
Tell me what you're doing here with the 1 month. Are these 1 month net new highs? Should be slide 14, guys. Yeah, what's going on here?
So this is just S&P up top. Down below is the 1 month high low. So it's the number of stocks making a 1 month high versus number of stocks making a 1 month low. You can see up top, the S&P came down off its high and then rallied again to a new high. It's going to be a new high again today. And over the last month, the number of stocks that have hit that are at a 1 month high low, or the 1 month high low, has been declining for a month, and it's well under zero. So that means, yesterday there were a lot more stocks that hit a 1 month low than a 1 month high at the same time the market is near its high. So this is bad breath. It tends to lead to the market at least pausing. I'm not saying that's a top. I'm definitely not saying that. I'm just saying internally the market is starting to weaken. Less stocks are participating. Less stocks have participated in this most recent move to a new high. And it's just a short-term warning that we might have some softness or a mini correction at some point in time soon.
When I look at this in the lower pane here, the breadth indicator, not only is it diverging, right, with a lower high since May, but it's been mostly negative since April now. So just like broad weakness it's kind of lingering for several months now.
Yes. Yeah. And a lot of people look at breadth and they'll say it doesn't work because we got negative readings 2 weeks ago and we still haven't moved down much.
Right.
It's
Well-
one of those things that lingers, like beneath on the surface, things are going well. You know, Nvidia hit a new high. Apple, obviously, yesterday you guys already talked about new high. Google's close to a new high. A lot of stocks, a lot of big stocks that are influential as far as the movement of the indexes are at new highs. So the S&P is at a new high. Beneath the surface, not all stocks are participating. It's a warning. It doesn't mean anything for 6 months from now, but it does actually have an influence over what goes on in the near term.
The other 499 companies in the S&P 500 could have been red yesterday. It's not really going to make a difference when Apple's up 7%, right? So it's gonna take an army to kind of bring this index down if the Mag 7 continues to work.
For sure, the top stocks are doing so well and they're so influential. I don't know the exact numbers, but it's got to be something like those top 6 or 7 are like 50% of the index or something like that.
Yeah.
So it's going to take some weakness there. But you know, if those big stocks are doing great, but beneath the surface, a lot of them are falling off. Eventually, that does peck away at the strength, and it does at least lead to some sideways movement.
Does this current environment? Yeah, go ahead, Spencer. Sorry.
So Jason, you know, you're monitoring breadth. You're definitely not concerned, right? You're bullish to the end of the year. But what would have to happen for you to raise alarm bells?
For me to raise alarm bells, you know, price action is going to be king to me. So if the market drops hard and fails to recover, that's going to be a warning to me. If
Like
some of
the major indexes?
yeah, the major indexes,
Okay.
the bigger stocks, the leadership stocks, but there's too much good among the leaders. You guys talked about semiconductors. It's not just Nvidia. It's applied. You know, it's ASML. It's Broadcom. It's Qualcomm. It's AMAT. It's like there's a lot of good stuff going on. It's not like, well, if Nvidia goes down, then it lights out. No, there's like a couple dozen semiconductor stocks that are all at new highs. So unless they're perfectly correlated, the market could withstand weakness within some of these stocks. So it's going to take a lot. And then to your question, like if you start having, you know, defensive stocks start leading, then that would be a little bit more of a warning.
Yeah.
But it's just not happening yet. Utilities are doing well, but otherwise it's just not happening.
I like what you said, Jason. Like we did this exercise on the show before. Anybody who's listening, you could do this at home. Just go to Koifin or any of these other, you know, free providers. Punch in the ETF, SMH if you want to look at the semis, XLK if you want to look at tech, and just go down the line. And you're going to see so many new all-time highs. So at least in large cap tech, breadth seems to be just fine. But
yeah, I'd say that the one part that is not necessarily fine is software is actually kind of weak.
Yep.
Salesforce, big hit. ServiceNow, Workday, Intuit, Snowflake, Adobe, like they've all actually. There's a lot of big cap software companies that have actually taken big hits. Software actually, other than Microsoft, crowdsource, a lot of software is down. So it's not all big cap tech that's doing well.
Yeah. So tell us about some more of these charts you brought along. How about the AD line? Chart 13, guys. No, 15, 16.
All right, so that's S&P 500 up top. Down below is the cumulative AD line at the NYSE. You can see they're very, very, you know, highly correlated. The tops match up, the bottoms match up. It's pretty simple. The market moves up. You want more advancers to beat decliners. The market moves down. Decliners are going to outnumber advancers. The charts match up pretty well. So divergences actually are somewhat telling, and that's what we're getting right now. The market came down, moved right now to a new high, and while it moved to a new high, the AD line has put in a lower high. Okay, so X number, you know, so on this most recent move higher, which is like now 7-8 days old, decliners have outnumbered advancers. Okay, it hasn't mattered because it's Nvidia and a lot of other big cap, you know, Apple, a lot of other big cap tech names that are moved up. They're carrying, you know, the weight of the index, but beneath the surface, more stocks have declined than advanced, and that's a little bit of a warning. It doesn't mean a top's in place, like absolutely does not mean that, but it does mean if you're an active trader, you're going to be a little bit more careful, maybe a little bit more conservative. Nudge stops up. Know that we may have some softness coming simply because beneath the surface, things are weakening a little bit.
Yep. What areas do you like into the back half of the year, Jason?
For now, I would stick with just the tech stocks that are working really well. I've been on the show before, and I've been like, I've told JC, like, I'll pull up the Russell 3000, I'll rank it by volume, and I'll just look at 5, 6, 700 stocks, and just I'll manually pull out the top 100, and from there I'll like narrow it down to like the top 20, and like that's my list. But I'm going to stick with what's working, which is tech is working, and gold did well. Now it's not doing well. Bitcoin stocks did well. Now they're softening, and maybe today it looks like they're popping today. So maybe they're a big mover. But I'm going to play whatever is, from a chart standpoint, whatever is just acting well. The charts are structurally in good place.
Yeah.
Is there an area that like we're not talking about enough, maybe because it's not ready yet, but is on your radar nonetheless?
China stocks were in the dumps. They were like one of the worst groups for a while, and some of those are actually not too bad right now. Okay, China stocks have, they're split. You can't, a rising tide is not raising all ships over in China, but there are definitely a bunch of stocks in China that are acting well. So I'm going to keep an eye on those. Solar is starting to perk up, another group that has been in the dumps for a really long time. So it's, oftentimes at the end of the year, you'll look back and say like, oh, the top 5 groups, and 3 of them were like the worst groups from the year before. So I try to keep an eye on some of the groups that were like in the dumps. But otherwise,
and why is that? Like, why is that a strategy? Why do you think like that works? Some of these just really beaten down trades kind of get snapback rallies, and you're kind of looking to spot those.
Yeah, I think they just get beaten down so much that one of two things happen. Either they disappear, or they have to bounce back. Like in the case of solar, like they can only drop so much. And at that point in time, either solar is done, like it completely just disappears, or they're going to bounce back. Like it's almost like having a lottery ticket when, during a huge bear market where stocks just drop. And like at a certain price, it's like, this is either going to bounce back, like double or triple over the next 6 months, or it's going to go to zero. There's not much in between.
No, I love it. And some of these solar stocks also right now are so heavily shorted. SunPower, Sunrun, this Nova.
Yeah.
Crazy short interests for this group right now, too.
Now, to Spencer's question, like that doesn't mean I'm just going to blindly buy them. They're going to, the chart has to structurally be strong. They have to come out of bases. The volume's got to be there. They got to respect some moving averages on pullbacks, but they're worth checking out because the upside is decent, even if they just, a lot of times you can have a weak group and weak stocks within the group that just trend down and down and down, but there are like 30-40% rallies within the downtrend. So they're worth at least considering.
So
the fact that you're saying that, the fact that we're even talking about this solar and we're not cringing, that's a big step in the right direction.
Pot stock investors everywhere are listening to this conversation and being like, what about us? Where's the snapback rally for cannabis stocks?
Right.
Oh God. All right. What else? What else did you bring along? You want to talk about?
I don't know.
I can't hear you, Spencer. Let's talk about the monthly S&P chart.
All right. So I sent this out just as a very simple 8-year monthly chart, just to show how well the market is acting. Rallied off the COVID lows in March of 2020, came back down, moved up towards a high, came back down again. A chart pattern trader would call this some sort of like cup and handle pattern. It breaks out. We have 5 consecutive up months, a down month, and now we're working on our 2nd consecutive up month. This is the 8-month S&P chart. It's as bullish as you can possibly be. The trend is up. The market is strong. If tops take time to form, we're months and months and months away from any type of top forming, unless just a bomb blew off in the world, in the market, and it completely changed the psychology of Wall Street. Like we are not even, you can't even say the clock has started with a top forming, not with what's going on right now. So this is the long-term chart. Stiff move down 2018, stiff move down during COVID, and otherwise this is just a very orderly, structured chart. Everything looks great, and you can't be any. And as I tell my wife, just stay long. There's no reason to be anything other than just long right now with this chart in place.
I love this. I think the world needs more monthly bar charts.
Yeah, the monthlies are they screen out so many of the day-to-day, week-to-week noise, and this is perfect. Like why? Most people would be better off just like looking at this and not worrying about the day-to-day numbers.
So let's talk about that because it's Fed Day. So I got to ask, right? You're a bull, primary trend guy. This all makes sense. What do you do on a day like today? Are you even listening or paying attention? Does it matter at all? Is there something Powell could come out and say that might impact your investment decisions, or this is just complete noise?
It's mostly just complete noise. Like as somebody who is bullish, I would be hoping that he says something that shakes confidence a little bit, market drops, and then that becomes a buying opportunity.
Right.
Because I think there's enough goodwill built up in the charts in the market that it could withstand some negative psychology. So from my standpoint, I'm like, hey, if the market goes up, that's great because I'm long. And if he says something that shakes things up and the market goes down, that's great because then that's a buying opportunity.
I love that. So you're saying more than, paying attention to an event like this because it's going to, affect or shape your thesis or view. You're paying attention. You're focused on it because it might provide some tactical opportunities.
For sure. For sure.
Yeah. It's good stuff. It's a great approach. Bring Sean in. He wants to say hello to Jason.
Wait, I don't know. Sean, is your camera working? Or are we okay? Yeah. Oh, no, now it is. All right. Sean, you're coming on. Hello? Are you here?
I'm here. What's happening?
What's up?
This is not my normal camera. There was a little camera difficulty. Anyway, before we got rid of Jason, I had to give him some shit. He jinxed our Chicago Cubs about 2 months ago. He went out there early. He went hard in the paint. He gave the Cubs a September Heisman, to mix our sports metaphors, and then they just shit the bed. Jason, it's all you, man. It's your fault.
100% my fault. Like we're a month into the season, I said these 5 teams are going to make the playoffs. The rest of the National League has to fight for the last wild card spot, and that was the top of the Cubs. They've been in the shitter since.
Jason, you're no longer allowed to make Cubs
I remember
predictions.
that. I remember that.
It's all my fault. I take full blame.
Well, hopefully I'll see you at the game in Denver in September. I can't believe you have to wait all the way till September. But,
I know.
Hey.
I'll be at least one of those games for sure.
Yeah, me too. All right, that's all I had to say, guys. Go back to your normal scheduled programming. I'm out. I just wanted to say hi, Jason. Love you, buddy.
We'll see you, Sean.
And he's gone. Jason, before we let you go, you got a lot of books behind you.
Yeah.
Any of them jump out that you want to recommend?
He's trying to run for his money with all these books.
Oh, yeah. So here's my favorite. Here's the first one that I've recommended to people. And it's still the first one I recommend everyone. So that's number 1 on the list. It's when I read that book, everything changed for me. Because
real fast, what was that book called? Because it's backwards on our picture. So
it's Stan Weinstein's Secrets for Profiting in Bull and Bear Markets.
Okay. All right.
When I read that one, everything changed for me because I thought Wall Street was like an old boys club. You had to know somebody. You had to have an uncle, a father, family member. You had to go to an Ivy League school in order to get your foot in the door. I thought it was like not really touchable. I was from Chicago, but didn't come from a tech or trading family. And so I didn't think that I could like get in the arena and participate in that arena. But I read that and it was like everything changed. I didn't need to go to college and major in finance. I didn't need to have a PhD. I didn't need to have an MBA. Didn't need to have connections or anything. Like it simplified. It made me realize I can make decisions from the charts, just looking at price and volume, certain setups. And it completely, totally it stopped me in my tracks. And it's the first book I recommend to anybody. And it's still the first book I recommend.
Love that.
Nice.
It's a popular favorite among technicians.
And it deserves to be there. Yeah. It's not just hype or, smoke and mirrors. It actually is a good book. It'd be great if he updated it because some of the charts are not clear.
Yeah.
Kind of hard to read. But it is a fantastic book. I recommend it.
Yeah, some of these old technical analysis books, man. If you get like an original John Murphy, these charts are funny. Some of these charts are hilarious.
Yeah, for sure.
In what way? Because I haven't read the original John
They're
Murphy
just
book.
really old bar charts. Like they're like faxed and scanned onto the paper. The books were written in like the 70s or 80s.
Yeah, the quality of the charts is terrible. But it's the way it was.
All right, guys. Jason Leavitt, the link to his Twitter, the link to his site are both in the description on YouTube. Check it out. Jason, it's been a pleasure once again. We want to ask you for any sports predictions this time. We'll save that for later. But thanks for coming on, and have a good one.
Thanks for having me. We'll see you guys.
All right.
You know, that Stan Weinstein book, very popular. Very popular.
I have to admit, I am unfamiliar. Also, I'm not a CMT. So,
also, love his approach of what to do on Fed Day, right?
Yeah. Jason rooting for the Jerome Powell to crash the market.
I mean, it makes sense.
Yeah. Not really. That's not really what he said, but also, you know, a down day wouldn't be the worst thing in the world, right? So,
but it's that mentality, right? He's thinking, okay, this is a primary uptrend. I don't need to buy strength. I can buy weakness. I can buy dips, right? I can buy like sell off on an event. Fed guy says something. That's an opportunity.
Yeah, for sure. So he's ignoring it unless it moves the market down, in which case he's paying attention and looking for buying opportunities. All right, it's 9:24. We got 5 minutes and change until the open. You want to talk some Oracle here, Steve?
Yeah, tell me what happened.
This is an interesting one.
Oracle, the latest legacy tech stock turned AI stock.
How often do we get a company that comes out and gives earnings and misses on their top line and their bottom line? They missed on both, and the stock is trading up. What is it up this morning now? 9%, 8%.
It was the read on futures orders, I believe, right?
And it was AI. Yes, it was. They talked about AI, how many, you know, their partnership with OpenAI that they're doing, and how many AI orders that, you know, they've gotten. And so, yeah, it was a lot of commentary about that, which is why we're up 9%, whatever today. But a very interesting dynamic here. And last I checked, we were off those pre-market highs, which is notable for me, just to see if it continues to leak here. But yeah, pre-market high 137. All right, we're close. We're up there. So this thing is holding on to most of its gains so far. It's early.
Slow day for news. Just scrolling through here. I don't really see anything worth talking about.
I got a few other things. So yeah, the Oracle chart was very interesting. The price action overnight, very interesting. We'll watch it closely this morning. That was kind of the only earnings report that I had, but there was a few other non-earnings things I wanted to get to. Do we have the chart of Affirm? This thing kind of got going yesterday during the show. I don't actually remember if we talked about it. I don't think we did. I think I'd probably try to.
This is Apple news, correct? Wasn't this Apple news? What?
Yes, this is Apple news. This is Apple partnering with Affirm. Apple Pay users will be able to incorporate buy now and pay later beginning.
So
what, later this year? Yeah, later this year.
If this is a good business, why doesn't Apple do it themselves?
What is the difference between? Well, because Affirm, I guess I don't really know. Apple Pay is just a technology layer that allows you to use a credit card or a debit card, right?
Spencer, Apple has a relationship with Goldman. They could do anything a bank can do. They proved that with the credit card. No.
Yeah, I don't know the answer to that question.
The answer is A, it was a rhetorical question, and B, the answer is it's not a good business. They don't want to be in it.
What buy now? You're saying buy now, pay never is not a good business?
Apple's launched its own credit card, so they're not afraid to jump in, right, to this industry. Why would they let somebody else do the buy now, pay later? Why wouldn't they take that in-house and do it themselves and do everything else themselves that they want to do? Why would this be any different? I don't know. I think that's a question. If you're buying the stock, you should probably ask yourself.
I agree. It's definitely a weird business.
It's a shit
put it
business.
that way.
This never ends well.
How is Affirm different from like Rent-A-Center? It's not. It's it's layaway. It's the same thing.
Rent-A-Center, that's like where you can go and like get a couch and like never pay for it. You pay like $5
Yeah.
a month, right?
Yeah.
Yeah, I never really understood that.
Same thing. Never understood that.
What is that ticker? RCI.
I don't know. No idea.
Huh. I thought that was a stock. Maybe not. All right.
It is. It is.
Rent-A-Center?
It is. It was.
I don't know why I can't find it.
Maybe it's not anymore. Or it might not be anymore. Whatever.
Now I'm interested. What else has happened in the news today?
Yeah, all right. If you follow Paramount, then you know that deal is off. So PARA, just another in a continuing series of wild headlines, a story that never ends. Will they merge with someone? Will they get bought? Won't they get bought? Looks like now they're not gonna get acquired by somebody else. So if you still own this thing after all this matters to you. But I mean, I can't imagine why you would own this stock. It's a disaster. What else did I have on my list? Oh, RTO. Do we have the RTO chart? This is sort of hot corner. It's not in the hot corner, but it's hot corner related. We can do that next. Nelson Peltz, licking his wounds from the Disney thing, has set his sights on a new target. We've got RTO. That is what Tryon Partners has taken a active stake in, according to various
Rent to Kill
Bloomberg and CNBC reports.
What is this company?
I will tell you. They are exterminators.
No.
Yes.
Awesome. So they pay a 2% dividend, almost 2%, $13 billion market cap. Strange.
You ever heard of Terminix? Like for termites?
Oh, this is Terminix?
Yep.
No kidding. My neighbor works there. Okay. Interesting. When you zoom out on this one, there's a monster base. I mean, it's not ready. It's not even close. But monster base in place. It just ran back up to its 1999 high recently and failed and rolled over. That's interesting. Look, I like these kinds of businesses. Nobody covers these stocks. Nobody talks about them. Nobody thinks about them. Terminator business or exterminator business. It's like a tow truck company, pawn shop. Nobody cares about these companies. The analysts don't cover them. You don't hear much. It's good stuff. It's the sentiment I like. And they're often just solid, strong cash flow businesses. I'll bet this is no different.
Sometimes with good dividends, although not in this case.
Look, this is Spencer. What do we say when we see a 1.
All right, you're right. It's not always about the yield.
But when we see a 1.8% yield, ooh, that's that sweet spot that we like, right?
Yeah.
That usually means solid fundamentals. Good company.
That's true.
All right.
Speaking of dividends, I saw Casey's General Store, which they had earnings as well. They also raised their dividend for like the 20, I don't know, for the infinity straight quarter a year. This
I've been looking at this stock chart for way too long now, and I have never once seen a Casey's General Store in the wild.
I saw one.
I finally see one. I'm gonna freak.
I saw one. When I was in Omaha, I think.
Really?
Yeah. I think I saw one when I was in Omaha, like a month ago.
So they're over there.
Yeah. They're way over there.
Okay. All right. One day. Me at a Casey's.
Do we have a hot corner, right?
Yeah, we have a hot corner every day. Every day.
I want to play.
You need a computer.
So hot right now.
If I told you, it's not even funny. It's not even funny.
I know, dude. If only you knew about my day yesterday. Yeah, I don't know.
I don't want to think about it. All right.
I don't know.
If I told you, throw up the chart. Let's start on the chart. Fonz, DTM. Okay. You know nothing about this. Obviously an AI stock, right?
Midstream. Okay.
Obviously AI. I mean, look at the trend. Vertical. Straight shot higher. Just from the January lows, up like 20 points. It's definitely not an energy stock. Think of what energy stocks have been doing the past few months. Can't be energy. So this one is obviously using AI to transport natural gas upstream or downstream. That could be the only thing that's going on here. When I look at a chart like this, even in the MLP space, so this is, jokes aside, this is a midstream pipeline operator. If you look at AMLP, right, or any of the ETFs or indexes that we have that track these stocks, it's in a drawdown since March, right? Peaked in March, been, lower highs, lower lows. I don't know. What's this one doing? So the relative strength here really stands out. This was a political filing, and they're often small like this, so we allow the small size on our list. But Maria Elvira Salazar, I don't know. She's probably, House of Reps. I don't know what state, but $15,000 to $50,000 purchase. And this one just stands out. They pay a nice yield. The relative strength is there. Ooh, Florida. I should know that. So this is a Florida representative. Listen, we're middle of range right now, but this is one you kind of put on your list and keep on your radar, and you can buy weakness in or strength in the future. But for now, in the middle of our range, that breakout above those prior cycle highs just looks really good. Not many names in oil and gas look this good right now. So this one stood out.
Can I offer a theory?
Oh, T-Man, I was being sarcastic. That's not real. That was a joke.
Wait, can I offer a theory?
Yeah.
It's just like M&A whirlwinds. There's a lot of M&A happening in the space.
Not in the midstream space.
Oh, okay. It was just a theory.
Right? Like who'd they buy? Marathon Petroleum or MRO, Marathon the E&P? It was MRO.
It was the wasn't MRO.
I think it was the MRO, but the point is
okay, I don't know.
It's a good question. The M&A, the acquisitions we're seeing are all happening in the upstream area. Okay? Because there is like a land grab going on. Everybody wants the Permian Basin land and assets, right? So that's why you're seeing all of the E&P names get gobbled up. We're not seeing it really with the refiners or the midstream operators, right? It's all the explorers. That's where we're seeing the M&A. And that makes sense because that's where the assets are. No?
All right. Before we move on, I just want to mention, obviously, we talk about the Hot Corner every day. The Hot Corner is a free note. It goes out every day. The link to get it is in the description. But more importantly, tomorrow at the close, 4 p.m. Eastern time, Strazza and JC are going to take time and actually walk through the process of how we look through these filings and filter out the 99.9% of crap to actually get the transactions that are important. And two, more importantly, how we use that information. When I say we, I mean them, how they use that information to actually find good ideas and good stocks to trade. We right now, we talk about, the names in this table. We talk about the chart, maybe what it's doing, but there's a whole lot more to this process than just here's a table, look at the charts, right? It's a process. It's a process, and the guys worked really hard over the course of several years to build this process up. They're going to talk about that tomorrow. I just put the link in the chat. It is also at the very top of the description on YouTube. It's the thing that says Hot Corner Live event. Check it out tomorrow, 4:00. We will record it. If you go and save your seat, can't make it live, it's okay. We'll send out the recording. But we're basically gonna every day we sort of tease this scan and what it can do. Tomorrow we're gonna really like go in depth on it and how we actually use it to make money. So that's tomorrow.
Very good. Okay.
We're open, by the way. Let me take. Whoa, Oracle. Whew. Hello, everybody. Actually,
So yeah, let's just check out the tape real quick. Let's just drill in. So all
Apple.
green across the screen, right? So the markets are reacting to the CPI print, which came in, I guess, cold enough to make risk asset markets very happy this morning. So all green here. Classic risk
not
on.
in the defensive sectors. Look at this. I mean, it's, like you said, risk on.
Stop. Classic risk on tape with defensives and utilities, right? So consumer staples and utilities basically unchanged. I'm seeing on an equal weight basis up 0.10, 0.20% on the day. Communications, healthcare, energy would come next. Then industrials up over percent, financials up 1.3%, consumer cyclical up 1.5%, materials up 1.7%, tech up about 2%, and real estate absolutely ripping. Why? Because real estate stocks, these REITs, are very, very, very interest rate sensitive right now. They have the same balance sheet problems that plagued the banks last year. So you're seeing a big relief rally from real estate, from banks, particularly regional banks, up 3.4% here today. If we just look at, what are some of the strongest groups on the day, and that's important, right? Because looking at what's doing the best right now is telling you what do interest rates matter most for. It's those groups that I'm about to read off. So in real estate, you got office REITs like 6% today. Hotels, motels, 3%. Within technology, huge rip from solar, right? Solar stocks. They need to raise money constantly because they're terrible businesses. Interest rates may be coming down. Very good for solar. That's why solar's up 5%, 4.5% today on an equal weight basis. Semiconductors would be the next at 2.3%. You also see something like speculative tech just rocking, right? With the prospect of lower rates. 3.3% for the ARC. If you look at something like materials, all doing really well, pretty much green across the screen, every industry group except for paper. Paper's a weird one. Consumer discretionary, every single industry group is green today, led by residential construction, home furnishings, home improvement, recreational vehicles. Again, the interest rate theme, right? Home builders, interest rates, makes sense. Within financials, it's going to be the banks. Banks and specialty finance leading the way. Specialty finance, that's a real estate trade too. It's a lot of housing in there, right? This is your Rocket Mortgage, your UWMC, Cooper. Industrials, what do you think is leading the way in industrials? It's not the rails. Rental and leasing up big today. Nothing red in industrials either. So this is just a broad stock market rally today. This is great. Energy muted a bit. Energy, not much. Now remember, energy is probably the ones that we would expect to lead if interest rates kept going higher, right? So not unusual to see lack of or less of a bid for energy than these other groups. Healthcare also not much today, but I'll tell you that XLV is looking pretty good up here, heading back towards those highs from earlier this year. And then communications, what is driving communications lower? Oh, T-Mobile, big down day here. If you look at XLC, though, we are up, I guess, 0.7%. Everything's looking pretty good there outside of T-Mobile.
Yeah,
So
we're off to a hell of a start.
Yeah, really strong bullish tape this morning. See how we close.
I mean, this Apple. Apple's just ridiculous right now.
Rocket's going. They're squeezing Rocket. Yeah, I see that. Love it.
I mean, Redfin is up 15% here. We talked about Affirm. Zillow's up 10%. A lot of blasts from the past, right?
Where did we just talk about Rocket? Weren't we just talking about Rocket? Was that on Chart Request Live yesterday?
No, it was not. Jumia, Zillow.
I'm so long, Jumia. That was my pick at the Portfolio Accelerator. I will remind you.
Every spec name that you can think of is doing its thing this morning. What a start! Wow,
dude.
All right.
The Amazon of trade, killing it
Yeah.
out. Woo! But not so much you, China. Man, what's it going to take for China?
The only growthy name I see here on my down list, I would call Moderna. I mean, it's high multiple.
Yeah,
even though
but
it's out.
they got their own issues going on, right? They're not going to.
I know.
They're going to drugs and stuff.
Well, who else do I see that jumps out to me? I mean, yeah, Workday. We talk about software being sort of the redheaded stepchild tech right now.
Spencer, these semiconductor stocks just look so good, like too good. Just go down the list, choose your fighter. I mean, can't buy all of them, but so many of these charts. I'll mark one up. I want to talk about solar first. Let's throw up these solar charts. I mentioned it before. I love that right now. We charted them out with the short interest percent in the lower pane. Let's start with Sunrun.
Do we have these?
So we're charting the short interest percent in the lower pane. And these stocks have been so bad for so long, right? So you see the price moving from the upper left to the lower right of this chart, but we have some sort of basing that's been going on since late last year in all of these names, right? I think that we can kind of pick our spots, and they're pretty clean levels or ways to get involved in each of them. So this is Sunrun, 25% short interest, 4 days to cover. Next.
4 days?
Yeah. So Nova Energy International. Ticker symbol Nova. This is a small one. Sub 1 billion. This one's clean though. Man, if this thing scoops higher back above those pandemic lows, about 615. You got some pivot highs there too. The market keeps telling us this level's important. The squeeze is on. I think this one's a quick double. Next. SunPower's really, this is one of the most heavily shorted stocks right now. See that short interest is about as bad as it gets. For this one, again, those pandemic lows, about $3. In fact, if you zoom out even more on this one, it looks even better. I put a chart on Twitter, I guess, last week. But SunPower against 3. I'm long calls in this one right now. Probably get long the other ones too. But, these groups, they'll move together. You see kind of the shorts get squeezed at the same time, right? Like the mechanics of a short squeeze, they tend to go together, right? So it's like a theme. And I think you're about to see some big moves from these names. I mean, they're running them already today, right? Big gains, each of these just out here today. Like you were saying, Spencer, all the speculative stuff, though, right? It's all working. So this is the tape for a heavily shorted solar energy stock. This is the exact tape for that trade.
Yeah, I mean, really, unless you're defensive or you're China or your bonds. Right. Well, that's defensive. So
China used to work on a day like today.
They have their own thing. They got their own thing going on. There was a headline about tariffs and EU tariffs on Chinese EVs. So
terrible.
Oh, Amazon. Hello, Amazon. Lagging.
Amazon looks great though. I mean, this one, it's like you go down the list, right? We always talk about just make a list. If you're wondering what Amazon's going to do, go look at NVIDIA, go look at Apple, go look at Microsoft, go look at Google, and then ask yourself, is Amazon going to look different than these or the same? You're going to get a breakout here. This chart looks fantastic. Really clean too. Amazon, I don't know. Pivot highs 190.
Yeah. Can we bring on Mary?
Yeah.
Let's do it.
Good morning, gentlemen.
Hey.
Hey, Mary.
We feeling spicy today?
I hope so.
Or is J-Pow going to kill it?
Market.
What's that?
I like a spicy market.
Me too. My screen is screaming and alerts are going off like mad.
Yeah.
Fun market, unless J-Pow kills it later today.
You get a lot of moves on a day like today. All those alerts go off at the same time. If you can anticipate some of these breakouts and jump an entry, then when everything goes at the same time, you're already long. It's really nice. What are you trading actively this week?
I'm hating myself right now. Actually, I was in ARM, got in ARM about a week or two ago, and took it right back up to, I sold half of it yesterday because we came right back up to about that 145.
Yeah.
And so I sold luckily, I still have half in. So, if we scream higher, I'm still half in on that one. But that chart looks really great, and just got a really great entry when it was holding I believe the VWAP anchored from the IPO. That's where I started the position, started building it in. And like I said, took half off yesterday for about 40%. So that was a big win.
These semiconductors, particularly the semi equipment and manufacturers, they just look fantastic. So good. ASML, same thing. What else? Are you still in the Robinhood? I was thinking about you.
Of course. Yep. Still in the Robinhood. I'm YOLOing that one. It's continued to work really well. And until it gives me a reason to sell, I'm long. The roaring kidding stuff, I think, helps a little bit, just because that's all kind of all part of the same story from the whole GameStop era. Yeah. But it's one of those laggards that it took a couple of years, put in a really nice base. That's what I was buying, was the anticipation of that base breakout, and then a couple of retests of some key levels, adding to the position. So that's been a really great winner too. And yeah, like I said, until it tells me otherwise, I'm just going to stay long. So
this is going to trade with the cryptos now, and I think that's good. You should like it more because of that.
Exactly. Yeah. So Louis put out a great chart last night. I actually had Fonz drop it into the deck, kind of along that same lines of, the Bitcoin outperformance compared to the miners, and is there a potential catch-up trade here? And so I really loved this chart. We've been talking about the miners constantly, for several weeks, several months even. And so I continue to watch those. I think they came in and retested some really nice levels here in the last couple of days. I started adding to those positions again. And, I didn't think you were too cute on your Bitcoin chart. I'm one of those people that has all the lines and all the colors. So I'm watching them.
Good things for these guys tend to start with a nice little shake like that. So maybe that's the shake that gets the breakout started, maybe not, but moving in the right direction for now. With the Bitcoin miners, Mary, I'm so with you. I am so irresponsibly long risk reversals in like every single one of these right now.
Same. Can you even pick a favorite? Because I've got 5 or 6 positions and 5 or 6 different miners, and I feel like every day there's a new one that pops up on my radar that I'm not in, and now all of a sudden I've got to add more to it.
Well, Wolf is the easy favorite right now, because this thing's just crazy. If you look at Terra Wolf, that's ticker symbol WLF, that has been by far the best. But then also this Iris Energy just looks fantastic. What are these guys telling us? They kind of jumped the breakout these past few days, right? The strongest Bitcoin miners are ripping, and they're not waiting for Bitcoin to resolve its range. I think that's information. If the others follow, that's fantastic. Another one I like a ton is Riot. It's got the second highest short of the group, and they just came out with a short report on it. So I think people know that the bears probably piled into this one, and there's some monster squeeze potential there. I like Riot a ton also because of that.
Yep, same. Yeah, so Bitcoin always has my attention, especially when the market is, feeling extra bullish. I get really bulled up on Bitcoin and the juice that we get from the miners, obviously. So if there's the catch-up trade happens, it's gonna be a fun ride.
Oh, this is funny. Josh says we scolded him on Chart Request Live for requesting.
Possible. It's likely. Dare I say it's likely.
Oh, market cap. That definitely happened. What's the market cap? Oops. These stocks are not for everybody. 1.3 billion. Oh God, yeah.
All right.
Some things, not most things, but some things are below our line. Gotta have a line.
Gotta have a line.
So can I talk to you about that blink that I was messaging you about yesterday?
Please.
Because now all of a sudden we opened and it gapped up over my level. So this is one, I don't know why this was put on my radar a couple of weeks ago. I think it must have been one of the scans that I run looking for really tight Bollinger Band compression and kind of like that squeeze of low volatility. It's getting ready just to kind of, make a push either in one direction or the other. So I've been watching this one, had a level drawn out right here at about 350 an alert. And of course we gapped above that, or I don't know if we gapped above it right at open. I just noticed that it was up 8 or 10% here as the market was opening. And so this one, I'd be curious to get your thoughts on. I thought it was solar. You said last night it's tied with Tesla and their charging stations.
I don't. I mean, I think they're trying to compete with Tesla.
Okay.
Right? So from a long-term viability, Mary, there's a theme with you. You bring these
What, the dumpster diving?
you bring these great short-term setups, right? Like this is a nice base. You have some clear levels here you could trade against. You're right. We got a little bit of the Bollinger Band squeeze there.
Check
Right?
the
So
RSI too. Nice bullish divergence.
So we're coming out of that volatility compression now, right? You're getting a nice move. The base is shaping up. I like it for a trade, but I think the narrative is that Tesla's going to eat these guys lunch, and 99% drawdown, probably pricing that in already.
You're right. And these, when I'm looking at these types of trades, these are not long-term investments for me. They're the quick little ride it until it's not rideable anymore. And so it's actually how I, was looking at Hood, and it's not when I was looking at it, it's not the greatest of companies. And, will it be around in 10 years? Who knows? But I like the base. I like the technicals from the Bollinger Band squeeze and the higher highs and higher lows in the RSI. Or the weekly. It stood out to me. And then today, of course, as my alerts are going off, this one was alerting. And I wanted to get your take on it, just because this is not one that we've really talked about ever. So.
This was an early under the hood name back in 2020, and it hasn't popped up on a scan since.
That's why it wasn't in rangefinder then. Yeah. Yep.
There's a really nice base here. We're above key VWAPs. Like you said, that momentum profile, which we're not showing in the chart, is fantastic. The stock has not been oversold since, November of last year. So I think this one probably keeps squeezing. I wonder what the short interest is on this. Mary, I could check.
I don't. I meant to look. And like I said, this was just kind of on my radar in the last couple of weeks. I was specifically interested about it last night, but I've got kids home for summer vacation now. So my, looking at charts has been seriously cut into time-wise.
So look, you got a 20% short interest here.
Oh, okay. That's good.
That's
I wonder what days to cover are.
I mean, they're running these squeeze names today. It's a great name for the fresh, or great day for the freshly squeezed universe.
Yeah, I'm going to be going through that list here after the show, just making sure that my alerts are set, and because I know that Sam had some new ideas. So that's also one of my favorite universes to trade, just because they're squeezy, spicy.
I'm seeing 20% on that of the float sold short on that blink.
All right.
But again, there's more to it than that.
20% short interest.
Also, it's low float. It's low float. It's less than 100 million shares. It's this one's a junkie.
My kind of trade.
Yeah. So,
just know what you're trading, people. Just know what you're trading.
All right, let's do some recess and hop out of here.
Yeah.
Where's the bumper? There it is. Click.
So truly, I really have nothing interesting to say for he says.
That's not true.
I've got these kids home for summer break vacation. They're all up in their rooms with iPads so they don't disturb me during the morning show. And it's just a balance of work and kids at home and the constant fighting and bickering. So with that said, though, it's summer in Michigan, so boats out. So any of our free time, I know Strazza, you golf, we boat. So lots of time being spent out on the boat.
That sounds nice.
It is wonderful. And we have no salt in our lake, so that's extra pleasurable.
Yeah, but the water is cold. They don't tell you that, Mary.
That's not true. Actually, it's already up to 70. Yeah.
So you'll jump in, right?
Oh, for sure. Yeah, I've already been in the lake this year.
Yeah.
All right, fine.
Cold for you, Spencer?
And there's nothing that'll kill you. Like no sharks or things that'll bite you or sting you. Big fan.
So, Danny Hurley, did we talk about this yet on here?
No, we didn't. Was that yesterday or the day before? I don't even remember. I think it was Monday.
I've been trying to talk about it. Nobody wants to talk about it with me.
I'll
So
talk about it with you.
Big news. for Connecticut people. Danny Hurley turns down, what was it, 70 million?
I
60
saw
million?
this. Yeah, it
Something
was
like
a
that.
big number.
He turned down 60 or 70 million dollars from the Los Angeles Lakers, probably the most storied franchise in basketball history, probably one of the best jobs you can be offered. Turned it down to stay at UConn. What I will say is it was kind of a lowball offer. This is the Lakers, and he's Danny Hurley. They could have offered more money. So that's fine. He's going to make close to that money at UConn. By the way, he's probably making $9-10 million a year at UConn. He now gets to stay at Connecticut for as long as he wants, try to three-peat, continue to win national championships. You're literally the king of the state. You're the king of New England when you're at UConn as the head basketball coach. And he'll be the highest paid employee in Connecticut for now until when he wants to retire. So I think that's a great move for him. Spencer, you kind of called it. I was saying to my buddy, I'm like, how could you turn down coaching LeBron James? This is like 40-year-old LeBron James, so I guess it's different. I don't know, but it's pretty cool. We're very excited at Husky Nation.
Yeah. James in the chat, I agree with you. You don't want to get fired in a year or two when things inevitably go wrong.
Yeah. He pretty much gets to stay as long as he wants at UConn now. And you know what he'll probably do? I'll bet you he goes and coaches the Knicks or the Celtics one day.
I could see that, but it would not be now. It would be down the line. But honestly, just a great day for college basketball. As a fan of college basketball, more so than the NBA, just a great day for college sports. And
Spencer, didn't Coach K famously turn down an offer from the Lakers when he was at Duke?
I think it was the Lakers. Yeah. This happened previously. This happened like 20 years ago. And he flirted hard, I think, with the Lakers, and then went back to Duke, and then was able to prove himself at the next level when he coached the Olympic team, coached all the stars, coached LeBron, coached Kobe, won gold medals, proved himself that way on the international stage. So maybe Hurley is the next Coach K, and I don't know, but just a good day for you, a good day for college basketball, a better day for you and your UConn.
Yeah,
fans.
you're right. This is good for the sport. This is good.
Great day.
Keep it
Great day.
All right. Take us out.
That's it. Okay. If you care, Fed 2:00 press conference 2:30. You all know that already. That's what we got. We are going to be doing the hot corner today. You'll have to watch it for a special announcement about the future of the hot corner videos that we're doing. But it is going to happen today at 1:00, and pretty much it.
Special announcement. Oh no.
Special
Can't wait
announcement.
to hear it.
That's what we got.
Let's go make
Thanks
some
to
money,
Jason
fellas.
Yeah, that's right. Go make some money. Have a good one.
Marcus, let's go. Hump day.